Trading stock options can be extremely risky, but can also make you a lot of money. Watch this video to learn how to buy and sell options and a couple basic strategies. Hello again, welcome back to Mind Money Masters. I'm Cameron, and today we're going to continue our discussion on trading stock options. From our previous post that was last week, one of my favorite trading vehicles are stock options. But before we get started, please make sure to subscribe to my channel up above, turn on those notifications so you can see any of the new videos that I post. Also, I want to make sure that you check out the description of the video, and I've provided several other links and trading strategy links, and then also some ways to build some passive income. So please remember to check that out. Also, my opinions are my own in this video. They do not offer any type of financial investing advice, as I am not a licensed advisor. Please work with your professional advisor before making any investment decisions. I found this quote by Warren Buffett. You know how I like to start with the quote of the day. I always like to have a quote before I get started on our slides. But this one's from Warren Buffett, and I thought it'd be really, really interesting to bring up. Investing in your education is the only way to actually be successful, regardless of any endeavor that you've been involved with. Think about like your first day at a new job. What you didn't know at that new job. You had to take time to learn what basically you had to be good at and what you had to learn. So the best investment you can make is an investment in yourself. The more you learn, the more you'll earn. Really, really agree with that completely, 100%. So today we're going to talk about call options and put options and some basic strategies around trading both of them. Let's get started. Okay, so buying and selling stock options. Just a couple things though before we get dived in. One of the major things that you have to do before is to make sure you select a stock. So options are derivatives, and we'll talk a little bit about derivatives in the next slide, but derivatives of the stock itself. So it has 100 shares of that company is represented in one options contract. We learned that from the other video that I posted. So make sure you do your research to establish whether or not you think the stock is going to go up, as in rise in value, or if it's going to fall, go down in value. Also, you want to look at the option quotes. These quotes are listed as strike prices and premiums. Also, there's a date called a termination date in these things. One real, I guess, from just a general risk management strategy, we're not diving too much into risk management within this call, but I want to make sure you understand 4 things to consider before buying options. One is, how much risk can you tolerate? What is your preferred trading time? Are you going to hold these for long term or a short term? And how volatile is your asset? Typically, you'll see if there's a shorter duration on the strike or the termination date, like a shorter, say it's expiring next week, expiration date, then it's going to have a higher volatility than something that's going to be out like maybe long term or called leap options that are over a year long. So one of the things too to consider is how volatile your asset is, and also consider the stock itself. Tech stocks are going to be a lot more volatile than maybe insurance stocks. So it's something to think about when we're getting into these options. Also, what are the past returns on various contracts? Look back at different contracts, look back at different things that perhaps you can typically track, based upon the research of the stock, whether or not the option has done well. So you have some past exposure there, but you also have to understand the basics surrounding that risk and that volatility. So when the volatility is higher, there's higher risk and potentially higher reward. But options can be extremely, extremely profitable if you understand the risk and you understand the markets. So you also kind of want to know where the large institutional investors are buying. One of the advantages of buying and selling stock options is that you can leverage an awful lot of shares for a lot less price than it would be. Say you're buying shares of Amazon, which is trading over $3,000, and it's like, okay, you want to buy 100 shares of Amazon. Well, that's $300,000. So, actually, no, I did the math wrong on that. That's $3 million for 1,000 shares of Amazon. So, you want to make sure that you effectively, kind of like you can leverage a lot more higher priced stock with a smaller amount of money. So something to think about there. That's kind of maybe probably more so where the institutional buyers are. We don't really look for options on things that are personally, as one of my strategies, I don't look for options that are really under stocks that are under $50, and I typically try to keep it like around the $100 mark. So I don't look for stock options on 15, 20, $25 stock prices. I don't really look for that. So let's get into the two main strategies, at least the two basic strategies. There are two types of options, a call option and a put option. Call option, I think we learned from the last video. Call option gives you the option to buy a stock at the strike price, or to buy the shares of stock at the strike price. Put option gives you the option to sell the shares at a particular strike price. Typical strategies with a buy call option or a long call option strategy is speculation. We're just suggesting that we believe the stock will go up. If we're just buying the call option, odds are we are betting that this stock will go up. There's really no reason to buy a call option if you think the stock is going to go down. You want to buy a put option if you think the stock is going to go down. That's the concept. Because remember, you're looking to buy it at a certain price. If it goes up, you can buy it and you get a discount for it, basically. You can sell it right away in the market if you wanted to. Say you bought it at a strike price of 20, the stock rose to 30, you can buy it, exercise that option for $20, it's worth 30 in the market. There is your basic speculation strategy. There's a strategy called sell or short strategy for income. This is predominantly what I'm going to talk about today, is just a covered call strategy. This covered call strategy is when you already own 100 shares of the underlying stock, but you want to get a little bit of income. So you sell perhaps out of the money calls. Now, when I say sell the call, you don't own the call, so you have to short it. So there's sell and then there's short. Those two phrases need to be understood. So if you short the call, you're selling the call option against your 100 shares. Now, a selling strategy, the concept is that you really don't want it to go up too far, because remember, if it goes above your strike price, then it could be called away because the buyer sees it go up too far, right? So if you sell a call option against 100 shares of stock, and maybe the stock is trading at $30 a share right now, and you sell it at, say your strike price is 35. Okay, and the concept is that we want it to stay below 35. Now, we sell it, we get the income from that, and the stock rises to 34, no issues, right? So we've already made the income, and we've also got the appreciation from the underlying security. If it goes above 35, there is a very good chance that your stock will be called away. That means pulled away from you. All 100 shares will be taken out of your account. Now, put options, we already talked about buying a put options typically for if you believe the stock's going to go down. So that's the speculation piece. The protection piece is that if you want to protect other shares in your account as like insurance. So you've gained quite a bit of money on it, or you've gained like a large gain, and you want to protect that gain. So that's where we have a married put. The married put strategy is for insurance. So you had a stock that rose from 90 to 120. Maybe you buy a put option right around 110, so you know you get $20 per share no matter what the stock does. Say it drops down back to 85, you could still sell it in the market for that particular 110 price. Now, there's a selling strategy as well for put options, or a short strategy. A short strategy for put options, this is kind of an interesting strategy. One, you're going to capture the income, of course, because you're going to sell it. But you're going to potentially, if you don't have the underlying stock, or if you're not short the underlying stock as a strategy there, if you're shorting the stock and you're going to short a put on top of it, it's, that's a different strategy. However, the short put strategy, a lot of times in most accounts, can be considered like a cash secured put, because if the stock gets put to you, in essence, so remember, we're going to sell the put believing that the stock will go up, right? So if we're selling the put, it's very similar to buying a long call. But we're selling the put because we are the opposite side of the coin of the buying put. Buying put, we believe it's going to go down. We short the put, we think it's going to go up, and we can either get it for a discount, or we just short it for some additional income if it's not going to go too far up or whatnot. But that's one of the things to think about. If we short the put, we can get it for a discount. And a lot of large institutional investors do this where they call it naked put strategy because they don't necessarily have to have the cash in their account to cover it if they get put to the stock. So I know that was a real quick strategy going through that. We're going to do some more strategy sessions on buying and selling options, but that's kind of just a basic strategy session associated with calls and puts. Key terms to know, I've talked a little bit about these, I believe, in the money. So in the money, when a call, say a call stock option is in the money, that means that the strike price is less than the stock price. So it's fallen. Remember, calls, we want them to go up. We buy a call, we want it to go up. Now, if it's below that strike price, it's in the money. So that means someone can potentially, if you bought a call and it is below the strike price, basically in the money is less than the stock price. So with a put stock option, it's the reverse. Okay, so we talk about, when a call stock option in the money, it means the strike price is less than the stock price. When a put option is in the money, the strike price is higher than the stock price. Out of the money, so we say the call stock option is out of the money. We mean that the strike price is more than the stock price. So if the stock price, remember, is dropping, that's out of the money. So if the stock price is going up, then that's higher than if the strike price is higher than the stock price, then then we just talked about that's going to be out of the money. Sorry, in the money. I'm reading my notes here and it's not quite working. So at the money, when either a call or put have equal value for both the stock price and the strike price. So that's when we say it's at the money. Strike price is the price agreed to buy or sell. The premium, we talked a little bit about this as well. The premium is just the price that you pay. So it's basically the fee that you pay to have the option to exercise that. Derivatives. So derivatives are the general term for options. So derivatives are any financial product that obtains its value from how well another one performs. So I like to go back to the original status of like looking at an orange. So you've got an orange, right? It can make orange juice. It can make multiple different things associated with the orange itself. So we've got the juice, you've got the pulp, those derivatives of what you can create from that one particular orange fruit. So, yeah, these are some key terms to know. I just kind of want to leave you with that. Again, once again, just definitely please, if you like anything on this video, comment, like the video too, subscribe to my channel. Feel free to also reach out to me if you have any questions. Check out the descriptions. In the description field, I've got a lot of links in there that might be beneficial to you as far as learning more trading strategies, and then also how to build some passive income streams. I definitely believe that there's multiple ways to make money out there, and then the more money you have, the more money you can invest. So think about that. Yeah, I hope you have a great day. Cheers to your success, and thank you for watching.